Our job, our mission here at PreMarket Prep and Stock Trading Network is to take all the different factors into the market: geopolitical, fundamental, technical analysis, and try and come up with some trading ideas. Easier said than done in this market environment, but as the title of the show is, green light go. What are the implications? Is everything already settled over there? Well, we're getting conflicting reports, but you know what the market really cares about. Doesn't look like that's going to happen. I don't even want to say it. But let's get it started. Pre-market prep. We're going live today, right now with you. Folks, let's get it going.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, strong rebound yesterday. Up again here. 40 handles, 69.50. Trying to fill some gaps. Maybe look at your charts and look at those Friday lows and closes because we're getting right back up there. The buck down about a dime here, 98.47. Just trying to settle in. TLT flat, 87.38. Crude backing off. USO down a $1.50, 71.84. GLD and SLV going in opposite directions here. We'll talk about the implications in the gold and silver market. Gold just up a tad, and silver up a $1.50. SLV 85.35. And Bitcoin futures, well, it's been bouncing between 85 and 95. That doesn't help you much when it's at 90K. That's down $230, right at 90,000, right on the kisser. These charts are brought to you by TradeStation. Chart, analyze, customize, all in one platform. Let's bring Triple D to the stage here. And I didn't want to say it on the intro, Dennis, here, but I guess what we were most worried about was, the big one, WW3, right?
Well, I mean, the market was worried about the fall of NATO. Like, this is what the worry was. It wasn't about Greenland. It was about the fall of NATO. And when he said yesterday, that he's not going to use force, it was green light go, right from those comments. I know we had some pullbacks in the afternoon, but when he said we're not going to use force, it was green light go. That's what the market wanted to hear. It made the market comfortable. We exploded 50 handles on those comments, and then we just continued to move up after that as well. So that's, what the market wanted to hear. Now we're getting lots more commentary today. Trump talking again. Can he change his mind? He absolutely can change his mind. He's changed his mind on lots of things before. But, that commentary was really important. I think, there's other commentary that's really important here as well. Lots of great commentary this morning. I'm just going to try to grab some of these headlines for you here because U.S. military invading Greenland was never on the table. That's what Wright just said 36 minutes ago. Also, Trump, is still talking and saying he's not going to pay anything for Greenland. It's going to be total access to Greenland. So it sounds like this isn't a deal to take over Greenland. It sounds like a deal to gain access to Greenland so they can do what they want to do, which is build the Superdome, whatever you want to call it, the Golden Dome. So this is what the market wanted. This is why we are higher here today. This is why NATO is still alive. Like, it was scary there for a few days. It's like, is NATO going to fall? Because if you get the U.S. invading, a country that's owned by NATO, what does that mean? So at this point in time, it's green light go.
I mean, if it, factoring in, all these different things, was it really a possibility that the NATO was just going to go bye-bye? I mean,
it was. No, it was. Brentster, come on in here. And Brentster is back from the dead.
Brentster!
He was sick for a couple days here. He is back. He is alive. He is doing well. Welcome him back with a big applause. We did miss you. I mean, obviously you've been sick for a couple days here, but, you can come into this conversation a little bit here too. I mean, I believe that, the market was worried about the potential fall of NATO. I mean, we were talking a lot of tough talk. And you were one to correctly point out this is probably more art of the deal stuff. And I think you were definitely correct. So props to you for the, saying it. I don't know if it's on PreMarket Prep or Stock Trader Network, but you were, saying that, when we're all worried, is like, this is more art of the deal stuff. And with, the Secretary of Energy, right, saying this morning that invading Greenland was never on the table. I mean, that shows that Trump was just talking tough to get what he wanted. And it appears to have worked.
Well, thanks, Dennis. I think it is important to use the market here for indications about, I guess what's happening with Greenland and the EU and NATO and the US, because we have certain themes, certain trades, certain sectors, certain groups that are responding or aren't responding. So, we can give our opinions all we want and stuff, but probably the best opinion that we want to follow in most cases is the market. The market does, for the most part, a very effective job at pricing a lot of things in. So, we were kind of like, we've been talking about silver and gold anyway, but was that trade, is that trade sort of off the table because there was no invasion of Greenland? That's now off the table. What about the war stocks? The war stocks haven't really sold off. The crude.
Yeah, that's
Well, here, and let's bring up some charts here, because this is a good point here. I mean, we can talk about, invasion off the table here. Maybe it's the Iran situation where the war stocks, it was multiple headlines driving the war stocks, but it's a good point here, Brent. Lockheed Martin hasn't sold off at all. LMT is making new all-time highs here today. This has been an incredible run. It's up 100 points in 2026, which these stocks, if you look historically, don't have these kind of moves very often. So, geopolitical risk rising was the reason for the Lockheed Martin rise. We have not seen it sell off. So maybe, I think it's probably more to do with the fact that we're getting big investments into, Department of War, big investments into defense. I mean, all that makes sense, because we did see a sell-off in AVAV. Now, they had a contract thing. They had something that wasn't, 100% there. So it sold off substantially. KTOS kind of had a tougher day yesterday, selling off a bit as well. So we have seen some of these stocks come back down, but the spending on defense is not going away. He's talking about another $500 billion. So that is a tailwind for all these stocks, and probably keeps them, because you don't know what he's thinking next too. I mean, just because, invasion is off the table of Greenland, at least for now, you don't know what he's thinking next. So I think, there's still that defense stocks. But the market's immediate concern, what the market was concerned about when it sold off, 2 days ago, was, could NATO actually fall? Could we actually see the U.S. invade Greenland? I mean, this wisteria was on the table. When Trump took it off the table yesterday morning, the market, the overall stock market, started running. And it did have the afternoon pullback, but it really hasn't stopped.
I mean, also just going back to the defense stocks. I mean, didn't we get some tough talk on? I mean, in the same day, the one day, he said, stop buybacks, no dividends. Executives are making too much. Remember that?
Oh yeah,
all the tough talk.
yeah.
And then I think the same day, but
no, yeah. Literally 2 hours later, like he was
Yep.
cutting up, and then he's saying, "Well, we're going to increase the defense budget by $500 billion." And I mean, there's the other wild card too, is we still haven't got this ruling from the Supreme Court on tariffs. That, tariff money, a lot of that is going to go to these defense stocks. So I do think, we're linked there as well. But, odds were that they were going to. It's starting to drift a little bit. But last time we looked, I think there was a 72% chance that the Supreme Court rules against Trump. But they still haven't ruled yet. The longer they go makes me think that they're, maybe there's a ruling that, okay, well, maybe it's a partial ruling. Maybe it's not all in or all out. There's lots of things to consider here. But they're obviously not just saying, oh, yeah, the lower courts went against them. We're just going to hold up the lower courts and that's it. I mean, this is, it's something that they're obviously contemplating very seriously here.
32% right now. Supreme Court
rules in favor. That is drifting
rules in
higher.
favor.
So it was
Yep.
20, a week and a half ago. So Supreme Court, the longer it takes for this decision, I think works in Trump's favor.
Mhm.
That's what I think.
Yeah.
And they know it's a mess. Like, if they rule against and he has to pay all this money back, I mean, what a mess that's going to be. They know that. They're probably trying to find a way to make everything, clean. They're trying to make, we don't, it's going to be really hard paying all this back. How can we do this? They're probably thinking a lot about it. That's why the ruling We've expected it 3 times now. It hasn't come at all. They're taking their time with this one. And I think that does work in Trump's favor.
So what about a top trade from the end of last year, and it's continuing here into 2026? What about silver? What about gold? Do we think there was, like a very large premium in silver because of geopolitical issues?
I think it was a bit of a driver. I think it was. I think you definitely had the 2026 move here, moving up in the geopolitical situation. When geopolitical risk rises, gold and silver tend to do well. They didn't sell off, though. We haven't sold off much. We're a day and a half in. The S&Ps have rallied, 110 handles from those lows. And silver and gold are kind of just like, it wanted to sell off yesterday, but really didn't here, Joel. And you were making a good point here, too, when I was bringing it up. I mean, yeah, geopolitical rose in 2026, but silver's been going up for a long time.
Yeah, I mean, you can see the monthly here and just years and years of underperformance relative to the market. And you can see that it started catching a bid. I mean, you could realistically say that it broke out in July of last year, July and August here. So, is that an anticipation of geopolitical risks? I mean, the other thing too, inflation. Right? Right now, that there's no discussion about inflation. There's no discussion about interest rates, right? It's all about what's going on in the geopolitical situation here. So, you can use the positives here. Yeah, there's no, imminent threat here right now as we speak at this moment, unless we check True Social of rise, potential war effects. But what are these markets telling us? Silver's not selling off. Goldman Sachs just came out with another forecast, 5,400 by year end. But just look at Lockheed Martin's not selling off. General Dynamics is not selling off. I mean, you got to.
Well, that's the defense. I think that's the budget. That's what we were saying. It's $500 billion going in there, but silver and gold don't benefit from that.
Nope.
So we can link them up to a certain extent here, but is it caution for the silver investor at this point in time? I would have said yesterday morning, yes, but with the we're now 24 hours past the force going to be used commentary, we didn't really sell off much. It's a lot of people who are just it's a crowded long for sure. It's an incredible move. It's something to think about, but we've been in this market here where pockets of momentum are relentless, like SanDisk and Micron. This is the most momentum that I maybe have ever seen in companies of this size. Micron is approaching $400 here this morning. Kramer has done on Mad Money twice now, saying sell, take your money and run, that this is unsustainable. And it just laughs in his face. He did it 2 nights ago, and SanDisk went up 10% more. I mean, this is unbelievable, these moves. And maybe it's obviously just linked to memory prices here. But, eventually you think it's going to, these memory prices are going to come back in as well. I mean, SanDisk in 2026 is up over 100%. We're 3 weeks into the year. These aren't small companies. This is major market cap here too. Like if we go and look on Micron, this is not like a penny stock. This is not like a company that's got a small market cap. You're talking SanDisk. Now, putting on $30-40 billion worth of value here. Like these are serious moves. And Micron's going to be a lot more than that. But
Micron market cap is
incredible. What has happened?
Micron market cap is 440 billion.
So you're talking about $300 billion in the last 3 weeks put into SanDisk and Micron, just like market cap just creation. This is incredible. So fighting momentum in this market has been just ruined. Now, it's, again, you see, certain momentum to the other side as well. I mean, the software names, it's incredible there too that they just cannot get a bid. CRM trying to rally yesterday. Everything was rallying yesterday. It was the everything rally. Software, ServiceNow tried to close red. Did it? Did ServiceNow close down? 125.40. It did. ServiceNow closed down yesterday. This is incredible. The momentum in this market to the upside in stocks like Micron, SanDisk, Western Digital, Seagate, then momentum to the downside in the software names. It's relentless. it's relentless. You got to keep that in mind when you're trading. Yeah, maybe the market itself is kind of chopping around a bit, but the momentum in individual names has been relentless.
ServiceNow, I mean, I looked at the IGV yesterday. I mean, that just tells a story there. I mean, Microsoft, who kicked off the whole AI trade.
Microsoft closed down yesterday.
Yeah, but yep, considerably down from 454.52 to 444.14. So I know we could talk about a rating on someone trying to pick a bottom here in a few minutes, but
well,
boy, oh
Microsoft
boy.
and Oracle, just a side note there, because Phil's talking about Microsoft and Oracle are trading up here this morning. OpenAI doing another round of funding. Looks like valuation could be higher again. So that is a bit of a driver for Oracle and Microsoft here this morning. But we know it seems like every time Oracle and Microsoft have a good morning, they don't have a good afternoon. I mean, Oracle made new lows again too. So guilty until proven innocent, I'm going to say on both these names. Sure, everybody wants a cool turnaround story. Everybody wants a bounce. Everybody's been trying. A lot of people have been trying on these software names for a while here, and it just has not happened. So I don't know what turns these stories around. But all I can say is it seems like the blind squirrel wins the nut every single day. If you're just blindly long SanDisk, blindly long Micron, I have no idea when it turns, and it's going to be violent when it turns, and it's going to be like an 80-point down day out of nowhere on these stocks. But man,
who knows
an
when?
80-point down day on SanDisk takes you now back to where we were 2 days ago.
Yeah.
So,
all right, let's shift topics here a little bit, and we're weathermen here. We're infotainment, right? We got Brett the Weatherman back, and the hurricane trade, right? Well, no, it's wintertime. Ice storm trade? What's up with that big? I don't know. It could be chilly down there in the south.
Well, this is, Chris Bretcher pointed this out in the room here and set up a trade as well, and Generac moving here too. So the details here, we still don't know all the details, obviously, but it's tracking that this could be one of the worst ice storms that we've seen in years, coming and starting Friday. So it's going as far as south. Chris is down in Georgia, and he's preparing down there.
Preparing.
Like it's starting.
Yeah. Wow.
Like it's going to go. They're talking about crazy amount of ice down in Georgia. So it's going very far south. So this is going to hit. It's like I get ice up here, and we laugh at it because we just have ice and snow all the time. But it's different when you're down there and you don't have winter tires and you're not prepared for all this stuff. And trees and ice storms don't mix too. We had a horrible ice storm up here back in April of last year. Like our ice, we don't get ice storms because we're too cold this time of year. It just snows. But I mean, this ice storms are scary when they start coming in. They can do a lot of damage. Like we had millions of trees down back in April. So could that happen in the south where you get trees falling on buildings and causing a lot of trouble? Is the hurricane trade for January potentially in? Because that's what Chris Bretcher is thinking. And I kind of agree with them. Generac running yesterday, and again, it was the everything rally. So a little bit of Generac running when it was just the everything rally. But running up here again this morning, people are buying the stock. Home Depot and Lowe's are two other ones to think about. Both those stocks having strong days yesterday as well. The hurricane trade in January, that's kind of what we're seeing. I wouldn't be surprised if we see continued strength into the storm, which starts on Friday.
And if we go to historical patterns, which we were looking at with Chris on this, a lot. I mean, of course, you got to be a weatherman, and you have to check on the forecast and how things can turn suddenly. But there's been extensions. We were talking about it, yesterday, late in the day, and it was like, is it too late? And it's like Chris pointed out the indications that it can go up. It can even go a few days after while the damage is being assessed. And
if it's bad.
Yeah. Generac, Home Depot.
A few days might even be conservative. We've had ice storms in the Midwest that have been weeks. I mean, that's not to say that this one's going to be the case here, but I don't know. Kind of a tough
lot
one.
of time what happens with the hurricane trade, and Chris was pointing this out too, is you have the run up ahead of the event, and then the hurricane isn't as bad as feared, and then you have a significant sell-off after the event. Sure. That could happen here as well. But in the cases where we've seen the hurricane trade before, in the cases where it is as bad as feared or worse than feared, It could be a continuation in these trades as well. I
Mhm.
mean, if you get a lot of damage to buildings, a lot of damage to, like, where Home Depot, Lowe's benefit directly from that. So, and they're talking about 33 states getting hit by this, folks. This isn't
33?
like isolated. 33 states is the estimate here now that are going to potentially be hit by this ice storm. So it's significant. And I think people will be talking about it. They're talking a lot about Trump, obviously, but I think later today they're going to start talking about this coming ice storm here. And that could be a driver. So obviously, pre-market prep, we try to talk, we'll tell you what's going to be moving here. This ice storm will be a mover here. So keep an eye on GNRC, keep an eye on Home Depot, Lowe's, and the other building stocks.
And you've had this run up in natty gas too, right? This unbelievable.
I think it's running with
point.
that as well.
Great point, Joe.
So we'll look to that. A lot going on here, but it's earnings season, right?
It is.
I mean, we got to focus. We got to focus on the fundamentals. We got to focus on the earnings, and we have a couple good reports, a couple not so good reports here. Let's start with GE. We bring good things to life. Trading down 3.25. It was a Q4 beat out of GE, $1.57 versus $1.43. Beat on sales here, 12.71. Wow, that's a big beat versus 11.17. You got a pop in a drop here in good old GE.
I mean, high bar, low bar. GE still a high bar. Maybe it hasn't done much in the last couple of months, but since April, this stock at $159 in April. It's almost 100% since then. So it is high bar for GE. Wasn't far from 52-week highs coming in. And you get the classic algo, buys it because its earnings are great. But the people, the smarter people, the traders in there know, well, the bar was high here, and this probably wasn't good enough. And then they start selling into that algo pop. So the pop was very short-lived here. GE leaking here now. Now, with that being said, I expect, just like I was correct with Johnson & Johnson yesterday, and I was saying this is the kind of dip that they probably buy because they like this stock. I think the same exact thing with General Electric. I think if you get any significant dip here, like let's say to the lower 300s, I think even the 310 area, I think buyers come in. So I don't think this is going to be a whoosh. It's ugly here. We're still green light go in stocks here. And General Electric with their aerospace probably benefits as well, from, an increase in defense spending.
Sure. The GE guidance was solid too. They're looking for 2026 earnings 710 to 740. Analysts are down closer to that bottom end of the range, around 710. So also solid guidance there. Another report we wanted to mention here this morning, Abbott, ABT. We put the earnings on screen here for a sec. Pull up the earnings. Read them off to you. Company reporting inline earnings of $1.50. Sales missing sales missing 11.5 billion. Analysts were looking for about 11.8 billion. Guidance looked pretty good. They're expecting 2026 earnings 555 to 580. Analysts are around 515, but next quarter's guidance wasn't so hot. Company said they're looking for earnings 112 to 118. Analysts are up at 120. We have Abbott shares trading down about 6% here this morning.
It's a defensive stock. Drugs are defensive. Obviously, Abbott Labs tied into the healthcare sector here. It kind of plays defense. It's not a defensive market right now. Green light go is probably not green light go for the drugs and the staples. So that's one consideration here. The other consideration is Abbott Labs is still a loved stock, and there's probably great support down here, 100 to 110. So could it pull a Johnson & Johnson and bounce right back yesterday? Maybe, but J&J was more loved. Like J&J is really loved right now. Abbott Labs not as much, so I don't know if I'm necessarily going to say it's going to pull the J&J. It has a setup to potentially do it, but I was more convicted on a J&J bounce yesterday than I am on an Abbott bounce.
Man, this Abbott, I have not looked at this chart in a long time. And this thing has been moving around. Peaked in September all the way down. This might be beyond the expected move. 7.53. That's a
Right
big move for Abbott. I think, boy, we know momentum gets going in these markets. And you know what I don't like? I don't like this air here between 115 and 120. And we're at 113.20. We're under 115. The next, you had a low at 113.50. So, and that was back in January of last year. So, you've traded below in the pre-market. Let's see if that pre-market low is defended here. just seemed like really overdone, but they did give some guidance. And I know these stocks are not related at all, but could this be like a Netflix? Like those levels that Netflix got into the pre-market, never sniffed in the regular session. Different stock, different setup, but man, to me, taking it out to the woodshed here after already being in a decline.
Procter Gamble reported, Mobileye reported, FCX reported. Maybe we should go to Freeport McMoran
Okay.
because it has been running and it has been a darling and it is dipping here as well. And the bar was very high here for FCX as well. Brentster, how did they do?
They beat on both the top and bottom lines, 47 cents versus about a 30-cent estimate. Sales coming in at 5.63 billion. Analysts were looking for about 5.4 billion. They didn't give any earnings or sales guidance. They did give a volume guidance though, but we don't have to get too nerdy here on the Freeport volume guidance.
Stock is very much loved. One of the best buying opportunities was when that horrible accident happened back in September and the stock went from 45 to 35. It has been straight up pretty much ever since. It feels like it's overdone. I mean, some of these metal stocks have really ran. Obviously, this is copper. Joel, I'm mixed on this one. I'll throw the next to you.
The highest low that it ever made was yesterday at 59.75. That's where you're traded now. I think this is one of these charts that you don't want to look too far left because I don't know where you're going to find good support. But to me, if this thing just can't get right back here at it regained 60, right the low from yesterday, boy, I don't know. I don't know where you're stopping here on the downside. It's only down. I mean, if the Bulls can regain yesterday's low, okay. Next stopping point would be 58.35. So that's what you're looking at. All-time closing high. You can mark that too if you do get a pop. That's at 60.35. That took place of Wednesday of last week. So we'll see if we get profit taking here off the FCX report.
Let's quickly cover Mobileye as well. I still have a position in my long-term portfolio, a small one on this stock, and I'm curious for myself, how did they do?
1 second. I just want to give a heads up that we are going to be getting jobless claims and Q3 GDP. And with the GDP, they've been given a look at prices. So we're also be getting Q3 PCE all in about 2 minutes here. Just a little heads up. Mobileye reporting inline earnings 6 cents. The sales beat 446 million versus about 430 million estimate. Guidance looked weak. They're expecting fiscal year 26 sales 1.9 to 1.98 billion. Analysts are up around 2 billion for Mobileye's guidance.
Stock's got huge support at 10. 10's the level.
You got
10,
it.
10, 10, 10, 10, 10, 10, 10, 10, 10, 10. Takes out 10. Probably got to get out.
Yeah, traded down 49 cents. I think this is a week going back to the CES. How many stocks had just crazy moves off that?
It was great. I mean, we did really well off the CES run-up trade. I mean, obviously, we had a lot of research. Michael did a good job putting the calendar together for us. There was multiple stocks. We had 5 or 6 awesome trades off of that. I sold 2/3 of my Mobileye at 14. I was like, I'm gonna hold a third. Should have sold it all. Hindsight capital, just in or out. Don't get in the middle. Just get in or out. That's why I always do better when I'm just in or out. Just holding.
Yeah, we all know. We all know about those. But the weeklies, the monthlies, they're all lining up here. Lower 10 handle. 10.04 was your low back in December. So we'll see. What haven't quite? Yeah, you did get there in the pre-market. Pre-market low 10.08. So we'll see if the Bulls can step up here at $10. We are 20 seconds away from some good old econ data. So what I will do is I will take this off the screen here, get my fancy eraser out, and we will go to the S&Ps and see if there's any kind of action here. Holding the gains, really holding strong gains here. We have a little gap fill Friday, Monday, Sunday, whatever you want to call that 3-day weekend that we had.
Waiting.
GDP
Waiting.
S&P 4.4%, a beat versus a 4.3% estimate. We also have jobless claims lighter than expected, 200,000 for last week, 200,000 jobs. Economists were looking for a reading around 210,000. PCE, let me find my PCE number here. PCE for Q3 up 2.9%. That was right in line. Market, pretty quiet here, huh?
Didn't move.
Didn't move. Like I was like, is my chart not
I
updating?
thought like the numbers weren't coming out or something because yeah, it didn't move at all here. So are we back to like some economic numbers doesn't matter now? Is that where we are?
I
'Cause it
think
used
we
to be
just
everything was
at
moving,
least
but
for today, at least for
yeah,
today, at least for
yeah,
this week, until further
nothing
notice.
burger.
What
That's okay.
beyond the nothing burger here. We started this bracket right here, right now at 50 and a quarter. That's where we're trading. So no one willing to buy, no one willing to sell off that number.
Well, back to our regularly scheduled programming here. Let's do an Intel preview. This stock has been unbelievable. Trump stock, Trump stock. Those Trump stocks, man, continue to move here. The stock is up from $35 a month ago to now $54. The bar, Joel, is very, very high here because this has just been running and running and running. But if Intel, I mean, look at the moves, and AMD too yesterday. There's some big moves happening here. I mean, once momentum starts going in a certain direction, we were just talking about that at the beginning of the show, it's hard to break that momentum. So even if the bar is high, you think there isn't dip buyers on dips on Intel? It gets back down to 50, probably find some happy buyers. Probably some people who are short are getting punished here. So, even though the bar is high and I think it could dip on the initial report, I would not be surprised that dip is bought. Intel, anything else you want to say, Mr.
Oh
Elconin?
man, I mean, we're selling off just a tad here. I mean, how could you justify this move? I mean, what to me the bar has to be out of this world.
It's
Like,
high.
I mean, their earnings, if they changed, is this a different company? I mean, this move to me. I mean, you don't want to stand in front of it. You don't want to, sell too early. But holy mackerel! I mean, is this move justified? Well, we will find out after the close here because I'm just you broke out at 50. You did have a triple top there, $4 above it. So we'll see if that actually. Look at the expected move too. For you.
Expected move, a couple things to get you ready for after the close. Expected move looks like around $5 for Intel.
Yeah.
We are expecting the report around 4:01 p.m. Eastern
Ooh.
time. So right after the close, kind of a nice thing. We don't have to like wait till 4:15 or 4:20, bated breath and sitting on our hands for the trade. We're going to get this info right after the close. Analysts right now, we are looking for earnings of 8 cents. Sales about 13.4 billion. Also, of course, we'll be looking for some guidance out of Intel. When I've been reading some of these results during the earnings season, I try to go to the guidance right away,
Yeah.
even before the quarter. The guidance is the forward looking thing. The last quarter is in the rear view mirror. So, just a nice little friendly reminder there that market likes to think forward, and that is guidance and that is outlook. So that's kind of where you should try to prioritize if you are
Always,
following
always. The
this.
numbers, the guidance trumps the numbers always, always, always. So if you're reading the initial numbers for the move, that's something, but the guidance will always trump. You have the biggest beat on both the top and the bottom. And if the guidance comes out and the guidance is weak, stock goes down. So guidance is what matters. Stocks, like you said, Brent, want to look forward to something. They always look forward. So it's why we get the catalyst hangover trade. It's why we get all these things. So I see you brought our banner up for Hive here. Let's bring up your charts here too, and we'll do a little bit of a word from our sponsor.
We are waiting for our guest here, Danny Kirsch. But while we have a second here, let's say thanks to our wonderful sponsor, Hive Digital Technologies, pioneering the digital transformation through AI solutions and Bitcoin mining. Hive Digital Technologies is a global leader in building and operating cutting edge data centers from Bitcoin to high performance computing. Hive is redefining the future by powering the world's most transformative technologies like AI with efficient, green, excuse me, and clean energy. There is a QR code in the bottom right of the screen right now. You can scan that to get over to HiveDigitalTechnologies.com. You can just type that into your browser. You can also click the link in the description of this video if you want to learn more about Hive. Thanks again to Hive Digital Technologies for sponsoring Pre-Market Prep.
Everything rallied yesterday, but Bitcoin did not participate here. Bitcoin sold off, obviously, with the S&P sell-off 2 days ago. Did not bounce. Ethereum, same story. Really did not bounce here. I want to just throw it to Joel here. What are your thoughts here? I mean, we've hung out here at the lows for a long time.
Just
I've been
hanging
saying I
out.
think it looks okay, but I don't know at this point in time. I'm starting to get concerned about Bitcoin. It's hung out here way too long at the lows.
I mean, consolidation station here, and we're just stuck in the middle. You had the false breakout over 95, but you can't get back down to 85. I mean, you're below the 50, you're below the 200. Don't they say nothing good happens below the 200-day moving average? I don't know. Let's see if it can regain that. I mean, very, very tame, very, intraday moves. Yeah, you see some big things here, but consolidation station until otherwise notified.
I mean, what about Ethereum? The charts are virtually identical, but I say that every day. But same thoughts here, Joel.
Ethereum here. I mean, that looks a little weaker. I mean, they both have got the pops. They're both in a trading range. I mean, 2,800. I'm going to go to 2,800 as the major level here because, they both had their spike downs, but you had three lows in a row at that 2,800 level. But this is a little bit closer to regaining the 200 day. So we'll see. Need a catalyst. So far, we don't have one.
Danny is getting ready here in the background. Let's go.
He
He's
looks
giving
ready.
us the green light go.
Cool. Green light go.
Danny Kirsch, head of options trading over at Piper Sandler. Danny, how you doing today?
I'm not. The audio's not coming through. I'm not sure what's going on.
Oh, we hear you well, but he can't hear us. Okay, we'll put Danny into the background here. Brentster, if you can work with Danny for a second. He can't hear us. We hear him well, though, so we'll see if we can get that fixed up. So Brentster will work with him in the background here. But just continuing, the crypto talk here for just a second. I mean, Joel, we talk about, relative strength. We talk about, participation here. Like, again, just going back to this Bitcoin conversation. It didn't rally at all yesterday. Like, that is concerning. Like, I mean, we rallied 130 SP handles, and Bitcoin often moves with the markets. We've been saying that for a long time. It didn't rally. And the weakness has not been good here. So just quick thoughts. Like, are you hanging out here for so long? I just want to ask you.
Yeah, there's one thing we say when you hang out too long in one area, like support. I mean, I could give you just like this Microsoft example. You just hung out. Like 470. Oh, that 470 is going to hold. It kind of feels like the same with Bitcoin here. Not as well defined. Did get the death cross back here. There's no technical indicators here saying that we got a rally coming in Bitcoin. But do you need a technical indicator? You need a catalyst.
Bring Danny back in here.
Okay.
We're gonna try one more time.
Can you guys hear me?
We hear you. Can you hear us?
Okay. Yeah. That was weird. Okay. Sorry about that.
That's okay. That's okay. Danny, welcome to the show. Head of options trading over there at Piper Sandler. So let's talk some VIX here, right? Volatility in this market, it's here and then it's not. Give us your take on VIX futures positioning.
So this is, and it's a little boring topic, but like the broader theme here is that people have gotten very, very short VIX futures. And the reason you would do this, remember like the XIV, remember that ETF from a few years ago that blew up? Like, I think it probably blew up 6 years ago at this point.
No.
Basically, it was short VIX futures and every day would make money. So every day people would pile in and the assets under management would grow. And then it got to the point where it was so large it actually caused that any sort of market mishap caused a huge volatility spike. Now, the short positioning isn't as large as it was then, and this was 7 or 8 years ago, but if you remember in July of 2024, things were pretty calm. Again, you had this really large buildup in VIX short positioning, so meaning people are getting very short volatility. And then in August, we were down a few percent, but VIX went over 50. It exploded. So you had a big volatility outperformance relative to the move in S&P. Usually, think about 2 days ago, we were down 2%, VIX was up small. We think with the current setup, you might have a incident where there's some sort of surprise that could cause a large volatility spike. I don't even think it necessarily caused a large S&P sell-off. So what we're advising clients is usually we're like, if you want to hedge your stock, if you want to hedge your book, buy S&P puts, buy Russell puts, buy Q's puts. That's the better trade. They would say 97% of the time it's the better trade. You'll be happy owning those puts if the market goes down. The current setup, we would say you're better off owning VIX calls because the short positioning is so large. So what we're advising clients and we're talking to people about is buying VIX February calls. That hedges earnings, that hedges the next FOMC. And then I think the geopolitical stuff looks like that like tacoed out pretty quickly around Greenland. But right now we've been in this, and that's what this chart is showing. VIX futures positioning amongst institutions. You can see that trade being very low. People are very short, and it makes sense, right? Nothing's really been happening. We've been grinding higher. Volatility's been going lower. That's been a good trade. We think it's very crowded, and you get any sort of mishap, and I would expect VIX to explode higher. The reason I think it didn't on Tuesday is that that sell-off happened to occur the day before VIX expiry, which was yesterday. So there were just a lot of people who had VIX January calls selling them that prevented any sort of pop. That's not the case now. You've got February expiries not for a while. I think people aren't as hedged as they were on the VIX side specifically. So again, you would need some sort of catalyst. Like if earnings are great and it's all good and rates settle down, then this won't work. But as a hedge on your portfolio, we've been saying buy like a VIX Feb 25 call. It should be like $1-ish today with market rallying and volatility coming down as a near-term hedge.
I mean, I don't want to. I don't know if the word's like disappointed, but I mean, like that was some violent moves that we had Sunday, Friday, Sunday night and Monday. Of course, the markets were closed and we calmed down a little bit. But what did you think that
I think what happened on Tuesday is that the reason like volatility didn't explode, we had a decent sell-off, but I think the reason that things sort of settled in is one, kind of hung on to that 6,800 level. So on a technical side, we didn't really crash lower. And two, there was a ton of hedges being monetized. So anyone who had a hedge, they were selling it, and that sort of prevented anything from getting worse yesterday. And I think that kind of kept things in. And also bond volatility settled down. And that's something we're sort of keeping an eye on. Because I think this was really driven by the move in like JGBs and then subsequently U.S. Treasury selling off. And that's what our firm has sort of been flagging, that's the biggest risk to our broader market call. We're bullish. We think the broadening out continues. And the only way that doesn't work out is if rates move materially higher. And we got a taste of that on Tuesday. But assuming rate volatility stays low and rates stay around here, we're bullish. But again, it doesn't take much to, I guess, cause a banana peel, and that's why we like these VIX calls. Is like a near term. If something bad happens, we think volatility massively outperforms, and you can monetize those calls and then go back to buying the stocks you like.
Danny, interesting graphic you sent over on leverage inverse ETFs and assets under management.
Yeah, it's crazy, right?
Exploded. So you're looking at 30. This is a Bloomberg intelligence source. $25 billion under management 2016. These now $170 billion. Is that right? 170? No, or is it even more than that?
No. Yeah, it's like almost 180 billion.
So leverage inverse ETF. Just people are going to these things. They love these things. I mean, is there a risk here that everybody's just like levering the hell out of themselves? I mean, they were trying to, we obviously have 3 times ETFs. They're trying to propose for 5 times ETFs. There's some of these. At what point in time does this leverage just have, a systemic risk to a certain extent even?
I think the 5 times were denied because it's so idiotic. Because again, if you have a 5 times ETF, especially if it's on a single stock, if it moves 20%, the ETF disappears. So yeah. I just think that they knew it was such a bad idea that they shockingly they're not going to do it. That being said, there is 2 times, there is 3 times. I was looking at today. There's an ETF called KOLD. It's 2 times short natural gas.
Oh,
So it's been getting killed. It's down 50% in 3 days.
Yeah, I know.
So I think like all of this, yeah, theoretically should exacerbate moves, but this ties into this view that's like when volatility gets this low and you're building up this kind of leverage, you can have a volatility explosion. It hasn't happened yet. It hasn't happened since really August of 2024. We had a big volatility move, but I think like the trap is sort of set. And the other thing on these leverage and inverse ETFs, why they've grown so much, I really think it's a function of money moving out of mutual funds and into the ETF wrapper. And
Right.
it seems like these ETFs you can charge a higher fee. So firms who issue these are highly incentivized to keep making more, and that's what's happening.
I mean, I get like the triple levered, on the short side because Robinhood for the longest time you couldn't short stocks. So I understand but when you got single stocks that are going 2 times, 3 times now, I mean, what is really the
Ooh.
point here? Is this not just a point to get around margin requirements? Like, is this not like trying to work around it? Because if I wanted to be long Microsoft and I wanted to have 100,000 in it, why not put 100,000? But if I only had 50,000 in my account, now I can put 100,000 by buying the 2 times. I mean, are there brokerages that just are like allowing you to like beat out the margin requirements here? I don't totally get why we need a 2 times or 3 times Microsoft. Why not just buy 3 times more of the shares then? Unless you're getting around the margin requirements. What are your thoughts on this?
I mean, I think that's certainly part of it. It's getting around, and I think it's their argument would be is that we can get cheaper leverage than you. So by using our product, you can what you would pay in margin is less than what we're paying in margin to
Gotcha.
set this up for you. And that's the argument. Again, these are like 1 or 2 day trade type situations. I'll say like in like something like a KOLD, like when you have these inverse ETFs, if something doubles in 1 day, or sorry, it goes up 50% in 1 day, the ETF goes to zero, right? It's negative
Yeah.
50%. So thinking about something like nat gas, which is going on, and my coworkers and I have been, one made a comment that we were joking about is that like nat gas screaming higher seems like, oh yeah, it's going to be cold outside. Like what a dumb product that like this. This riffs. He's saying the guy sitting next to me, like talking to this, like how dumb are we to pitch nat gas upside? It's like, yeah, but look at the forecast. Anyway, one trade that you can do and we've been starting to nibble on is buying puts on this KOLD. Because like if this continues, like if we get another squeeze higher nat gas, because clearly like things don't move this way, people are long. Like that can't be the case. I think people are getting short and getting squeezed out of their short. And I imagine as volatility picks up, you also have margin requirements pick up. So we like buying puts on like a KOLT, which is it's an inverse, 2 times inverse nat gas ETF. I mean, it's idiotic. And you're buying options on this. Like this is crazy. But if you keep squeezing higher, this will go to zero. It's a
wow.
$20 stock now. It was $40 2 days ago.
You're not trying to buy the dip, Danny. That's for
I
sure.
honestly, so like I feel like sometimes I try to be too smart for my own good, and I'm thinking about silver, where silver we've been bearish and wrong and just keep being wrong. So it's like nat gas, like yeah, the right trade is probably to be short. That's why I want to be long.
Okay. Um, let's talk some Greeks here, and let's talk about whole levels in the S&P and the cash, and let's talk gamma here in the
All right, so
S&P cash.
this sort of ties in again with like why we like these VIX options. So this is just positioning in the S&P. We net out calls and puts. So this is what's left. And the higher line saying like, oh, that's where people are longer or shorter. And you can see 6,900 is a big line. And as we move away from there, our guess is that dealers are short puts, meaning like customers are long puts. And so again, as we drift lower, we'd expect them to be more selling pressure on the market at these levels. If we get closer back around 7,000, then that's more of a sticking point. So we stick around, I think we'll stick around 7,000 and start breaking down below 6,800 sort of in our call. It seems like, yeah, no duh. I think if we're higher, it's much less volatility. If we're lower, it's much more volatility. And to be fair, S&P skew reflects this, meaning out of the money puts, the volatility is very high relative to near the money because of, I think, this current setup where we think that there could be a big pocket of weakness on 1-2% sell-off.
All right, so let's get to some individual stocks here,
Yeah.
and a stock that just had some earnings, a stock that is in the middle of a deal here. Help us figure out this Netflix.
Yeah. So one trade we've been doing and thinking about, it's a weird situation, right? Like it seems like the market does not like this Warner Brothers purchase, but to bet against Netflix has been a terrible trade. Their subscriber growth is increasing. I know people are disappointing by their ad sales and their earnings and how much they're paying for content. That being said, looking a little further out, we like selling so that's what these lines are showing. We like selling August 77, 71 put spreads. So the most you can lose by selling that is $6, and you collect, I don't know, a few bucks to do that, to buy an August 110, 130 call spread. So a few catalysts. One, let's say a Paramount comes in and buys Warner Brothers, you get a relief rallying Netflix on the deal not happening. Two, maybe the market changes its view on the deal. They're a little more bullish on it. Netflix looks more and more like monopoly. A recent example of stocks becoming basically monopolies and doing well. SIG, SGI, the mattress company that basically have monopoly mattress. If you look at like a COMP Compass, just about HOUS, they have a monopoly on real estate, on commercial real estate brokerage. So these legal monopolies, I think, are generally bullish over time. Initially, obviously, the market is questioning this acquisition, so we'll see if the view changes. But our view is stock has gotten wrecked. It could continue to go down. So that's why we're limiting our loss by selling a put spread. So the most you could lose is $6. And at the same time, if this stock starts rallying, if the stock starts working, if the deal breaks, you have $20 of upside. So that's sort of the thought process of this trade. So the bigger concept is, if you like Netflix and you like the product, we like selling put spreads to fund call spreads or calls.
Okay.
That way you
Yep.
limit your risk, and downside's really well bid, because again, there's a lot of people questioning this acquisition, and their earnings were a little bit squishy, I'd say.
Yes, yeah, that deal's still overhanging, but big
Hmm.
bar from yesterday. We'll see how that plays out in the market. So, there's a lot of different ways to play earnings, right?
Yeah,
Play the individual stocks with the heightened volatility and the options, and pay up to the premium. But you're looking at the ETF here for potential
yeah.
options.
One other idea we've been kicking around, and this is something we tend to like around earnings, especially when these names have been underperforming. And year to date, Google and Meta haven't done great. You're seeing the Mag 7. It seems that they're more of like been a source of funds for the rest of the market. I think it's IWM has outperformed S&P like 15 or 16 days in a row. So I think that ties in with this Mag 7 relative softness. Um, so one trade we like to buy the dip in some of these names. And year to date, for instance, Meta's down 7%. Buying XLC, so that's the Comp Services ETF. It's roughly 50% Google and Meta. So we like buying the XLC Feb 117 calls for $1. Stocks around 115. The volatility is much cheaper than buying Meta or Google options. So you kind of get a look at Meta and Google earnings without actually paying up for the volatility. So if you're bullish on those names, you want to buy the dip into earnings, we like these XLC February calls to catch Meta, Google earnings for much cheaper exposure than buying options on Meta and Google. So um,
Getting exposure to both.
you're getting the look without having to pay for it.
Danny Kirsch, head of options trading over at Piper Sandler, giving us a nice look at some option plays and a look at the markets. Danny, a pleasure as always.
I hate pitching anything bearish, but this is like the one time you can consider VIX calls. All right, this is the I won't do it
Okay.
again. I
All
won't do it again.
right.
Okay.
Oh, you're twisting my arm here.
Yeah.
Okay. All right. Thank you, Danny. All
Thanks,
right.
Danny.
Little creeping up higher here in the S&Ps
Yeah,
after
creeper
that
rally.
number, trying to fill the gap, but it's time for some ratings.
Oh, it's time for some ratings. Here we go. It's time for some ratings with The Fly, one of our new sponsors here on Pre-Market Prep. Rating the Ratings is brought to you by The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new Fly Pro platform with AI-powered company analysis, unique KPI charts for deeper insights. There is a QR code on screen right now, or you can click the link in the description to learn more about the Fly and the new platform. Let's get it kicked off here with a nice rating on Google this morning.
Yeah, bring it up here, Brentster, if you can. So we got Google catching an upgrade to strong buy from RJ, it looks like here. I'm going for my memory because I was trying to bring it up here.
Yeah, Raymond
If you've got some
James. Yep.
commentary, feel free. I also have the note up here as well, so I'm not sure if you have it available in front of you or not.
Can you read
We
from it,
believe
Dennis?
Google is likely entering a cycle of improving AI stack narratives and upwards revisions that could create one of the highest quality top line AI acceleration stories in the public universe. Those are bold comments there. I'm just taking it as a big note. The brokerage is setting it, so RJ is setting its price target to $400, which is 29 times their 2027 estimates here. Google, which has been, we've had, much of, the Mag 7 very weak here. This is one that's held up very well, and we are approaching all-time highs with Google. So we'll bring the chart up here for you, and we'll let Joel do some technicals.
Wow, big pop here, and you're gapping up. So we'll see if you have a pullback. The top of yesterday's range is 332.73. I'm looking at right where are we at right now? I mean, this is a big pop. I mean, you got the market favor, going with you. 335.24 was your high on Friday, so you're back to Friday's high. So people that got caught in that little dip to 320, right back there. I'd have to, if you're going with Ray J on this one, I mean, you want to see it open here at 335 and just go bid here and just keep going. The next daily high is not till 338.13. But I don't know. I would not comfortable chasing this one. If you had some, if you sweated out that $20 buck move, you're getting almost all of it back here in the last 2 days.
Okay. Quantum stock RGTI getting upgraded at B. Riley here. The quantum names are always interesting because all these things are pre-revenue. So when you get analyst commentary here, you always want to see what's up. B. Riley analyst Craig Ellis upgrading from neutral to buy. Price target $35. Oh, jumping in. There's a lot of metrics here. $35 set on shares, discounting 35% of the 2030 to 2035 TAM. Like, this is it. Like, we saw this the other day with the IONQ. You can read it if you want here too, Brentster, from the Fly. But we saw this a couple days ago when you were sick with IONQ. They're going out 5 to 10 years to try to get, because these companies are pre-revenue, so they don't have anything right now. So they got to go out years to try to project. So it's so tough. I think on the IONQ note, they were going out to 2035. I'm going by my memory correctly here. So they're out to 2030 to 2035 here again on this one as well.
I mean, there's a line in the sand here, and look at all these highs at the 2650 area. I mean, until proven wrong, that is major resistance. Look at all those tops there. We're still $2 away, so you want to play it up there. But I think, man, there's just a lid on this thing, and see what happens. 2650, and you got the 50-day. You even got to clear the 50-day here. So we'll see. Let's see if this could jumpstart.
Quantum is stuck in the mud. I mean, we've had huge rallies here in a number of stocks. IONQ not rallying, RGTI not rallying. It's like they went down and they're just sideways. When they stay down here this long, you almost think they're going to resolve lower. But I don't know. This is the kind of market that something can get hot too. So you got to keep an eye on the sector. I've been trading CCCX, which is a SPAC that's going to turn into Inflection, which is another quantum name. I like it because you get your money back at $10. So it's limits my downside on some of these things. You can say, oh, it's 60% down. That's a long way it's down, or that's Trump math there, or 30% down or 40% down to that 10. But I'm still, I like the fact that I know there's at least a base. Now, once it goes de-SPACs, then that $10 floor falls. But on these other names, I don't know. So I've been playing at CCCX every time it gets down to 13, 14. I've been buying it, or $14. I've been buying it. A couple times we've played it. The quantum names are tough because they're so far away from actually getting real revenue.
Let's do one more here. I think we can fit in a little data dog. I'm going to pull up my Fly here, and you guys saw it a minute ago, but this is a little sneak peek inside of the fly, and I will read some color here from the note. Stifel upgrading Datadog to buy with checks showing a large beat. They did cut their price target from 205 to 160. Recent channel checks indicate the company will post, quote, another larger than typical quarterly beat in the fourth quarter, driven by accelerating core growth and continued strong gains. The firm believes Datadog will guide 2026 sales to 4.1 billion, implying, quote, conservative 19% core growth, and that OpenAI integration remains at its current $90 million per quarter run rate. The stock valuation, quote, appears relatively attractive for one of the few names we cover with accelerating core growth, according to Stifel. And thanks for the fly for that nice color there on the upgrade.
Bringing the chart back up here, it has been absolutely killed. 200. Look at the line, Joel, as John here. I mean, there you go. This is an ugly, ugly, ugly chart. Everything about this is ugly. It's a contrarian call. I like a bold call from an analyst here, but holy cow, this is one that's been in the gutter. And you have overhead supply like so much at 140. If it ever gets back to 140, the sellers will just line up like crazy here. So it's hard to say I'm going to buy it at 129 with a potential 10 points upside. If it resumes that downtrend, it just gets ugly here too. This is going to be a tough turnaround story.
Yeah, wow, what that is just a steep one. Top of yesterday's range is where, if anything, that you look at this as a potential support. That's $2 away, 127. Looking on the dailies ahead of that steep trend line, you are running into a pair of highs at the 130 area. Haven't quite hit that in the pre-market. I mean, the only thing is, is this going to scare some shorts? Is this, gonna, and I don't know how many shorts are in this thing, but this thing's been absolutely straight down.
Yeah, you can squeeze them for a day or two.
Yep. Just real quick before we wrap it up today here, we've been having Shad Markowitz from the KE Report on the Stock Trader Network, and he has been all over this gold and silver trade, as well as the precious or the critical minerals will be coming on, and also Trader Pratt we've added. He joins us at 1 p.m. and he has a little bit different trading styles from us and investment styles. So two good things going on. Some extra programming here. Good day to start your free trial on the Stock Trader